There's been increasing pressure on South Africa's mobile networks, but Vodacom says it is happy and it will be able to manage the pressure as things go along. They've decided, however, to increase their dividend and even reinstate some of their growth targets as well in a time of difficulty across the world. Let's talk about this and a whole lot more then. Shameel Joosub is the CEO of Vodacom Group and joins us now as well on the line. Mr. Joosub, thank you so much for the time. Appreciate it. It's a tough time and a tough call to be making when things clearly aren't necessarily growing as quick as one would hope. Where does the optimism come from to be able to do something like upping a dividend, reinstating growth targets as well?
Thank you for having us on the show. I think, firstly, it's been a very strong set of results, given all the pressures of COVID-19 and the impact on societies in general. But I think we've managed to weather the storm quite well, and capture some of the opportunities around COVID-19, and I think therefore it's important for us to reinstate targets. So very pleased with the performance that we're seeing. And obviously that gives us confidence to be able to set our medium-term targets.
You were able to grow revenue, as you said, so it does make for really positive numbers on that front. Do you see that as a consistent thing from here on in, or will you be able to consistently grow your revenue base from here as well at these levels particularly? Because I could imagine that things could get a little tougher, especially coming from such a high base already.
Well, I think the it's a very positive first half. I think we do see things being a bit tougher in the second half in South Africa, but at the same time we do see a better recovery in the international. So I think also having a portfolio of assets will prove good during these tough times.
You've also instituted those growth targets then for at least the next 3 years. Won't you just detail some of those for us then? What are those growth targets?
Well, what we've done is actually so firstly, from a service revenue perspective, we are projecting mid-single-digit service revenue growth, and from an operating profit perspective, we've also indicated mid-single digit operating profit growth.
All right. You also were able then to decrease your debt levels at this stage. So your net debt going down 11.4%. What is your target perhaps with regards to that? Do you have an expected area in which you'd like your debt to currently sit at? Or to sit at in future? Currently it's at 36.6 billion rand.
Yeah, so basically our ceiling, as we like to call it, conservative, it's about 1.5 times debt to EBITDA. During the period, that came down from 0.9 to 0.7, so that was quite pleasing. And so we're quite pleased with the results, and I think that's still including leases. So I think it's important during these tough times to have a strong balance sheet. But we've chosen to stay with our dividend policy and continue to pay dividends whilst slowly trying to reduce.
Yeah, so we seemingly had a bit of a struggle with the line towards the end of that one there, but I'll continue nonetheless, and hopefully you can continue to also hear me. Just with regards to local consumers, of course, they'll always be asking for more price cuts and more price cuts, so it would be remiss of me to not ask the question. Can consumers expect any further cuts, and whether it be data rates, mobile rates as well, mobile usage rates at all?
Yeah, I think, firstly, remember we introduced a big price cut on 1st of April of 34%. And there'll be another price cut planned for 1st of April next year. But also through the year, we've done a lot in terms of promotional offers and so on. Targeting, of course, the 2,000 poorest towns through Connect You is our Connect You platform. Where you're getting up to 50% discounts of the current, but also through our Just For You promotions and so on. There's quite very, very good deals that are being offered to the market.
All right, let's get into your international operations just very quickly. Particularly, we can start off in Lesotho. Of course, you've had a few issues there. What's the latest with regards to your license there?
Well, basically, there's a interim interdict that's in place from the court in that essentially the case will be heard towards the end of. But I mean, we're quite confident in terms of in terms of the cases. We don't see it as the reasons given as reasons to revoke a license.
And for the rest of your operations, I mean, I saw them getting under a lot of pressure, but the weaker rand seemingly helping to perhaps even things out, if you want to call it that. Do you see that continuing for the foreseeable future as well?
Well, I think it's good to have a portfolio of assets because the weaker rand, you then do get the bump from the international operations. We do see a stronger second half in the international operations. So COVID hit later than it did in South Africa and the rest of the world. So, and there was a number of things that we did, including zero rating, free P2P or person-to-person payments across the markets, and that had a circa 1.6 billion rand impact on our numbers. So I think as we start charging again, that will of course help to recover during the second half of the year.
Well, it certainly is a good set of numbers there. 13.1% increase in the net profit, operating profit up 12.3%, with revenue up 7.8%. Normalized conditions is up 4.7% though. It's really been a great pleasure talking to you, Mr. Joosub. Thank you so much for that. Shameel Joosub is the CEO of Vodacom Group. They're joining us for their interim results then for the 2020 period. Certainly has been quite interesting to take a look at these numbers. Revenue certainly doing well. Of course, the increased use of data from consumers in a time when that has been critical for all kinds of communication over this pandemic has certainly been quite interesting. Those there are the numbers then for Vodacom's interim earnings.